Hey there, welcome back to the channel. This is the place where I show you how to take 10 $100 scalps every day watching multiple instruments for the predetermined bounce lines that the black box algos from the banks, institutions, and big hedge funds use to make their entries, thus reversing the market, at least for a moment. I show you where these spots are, where these bounces are most likely to happen, so you can exploit these moves just like me every day, multiple times per day. The thing I need to drive home is that algos are not intuitive. They don't trade based upon their feelings. They have very specific rules and instructions based on very specific spots on various charts. Luckily, we know at least most of these spots in advance. Now, of course, I say that I'm showing you how to take 10 $100 scalps per day, and keep in mind that that's just a round number to drive home a point. The thing to know is that if you're taking a trade at the right spot, entering with pinpoint accuracy right on the bounce spot, catching $100 is an incredibly easy thing to do. So I use that number, well, a lot. And remember this. 10 $100 trades per day is $1,000. Multiply that by 20 trading days in the month, and you've got 20 grand in your pocket. So that's why I use such round numbers. So let's get to it. But before we go on, let me ask that if you're a returning subscriber, please take a moment right now and click the like button for me. It would really help out the channel. And if you're new, and if you feel as if you're learning anything at all really, or if you just enjoyed the video, please consider liking, subscribing, and turning on notifications so you can know just when I put up new videos. And for you newcomers, if any of the concepts that I discuss in this video are unclear to you, go down into the notes and see my list of the crucial basic videos, I guess. And you can watch the 5 or so videos that explain all the terminology that I discuss in every video. Okay, let's get to the charts. Today I'm going to tell you something completely counterintuitive, and that is when to stop looking for bounces. Just as there are pretty clear spots for finding bounces, there are also very clear signs for when you should stop looking for bounces and just call it a day. Unless you don't mind shorting, and in that case, this video is definitely for you. So, going back a couple of weeks, I'm going to open up the SPX chart and the VX futures chart, and I've stripped away everything but our primary lines, and those would be the 6 major lines that we have on every chart, like the RTH open, the previous day close, the half gap, the previous day VWAP close, the previous day high, previous day low. Also, I'm keeping on the main pivot points and the weekly pivots, but I've stripped away anything volume related like VWAP, volume profile, and also all the moving averages are gone. Now in this particular chart, you can see that we're looking at the previous day's action, which was kept in a relatively tight range. And then we open, this gray here is the pre-market, although there's no actual pre-market for SPX, of course. And the new day opens very close to where the previous day closed. So you're going to have your RTH open in cyan blue, the previous day close with the heavy gray dashed line with the half gap in between. Down here you see the previous day low, which was right here, the previous day high, which is right here. And then you see various pivot point lines throughout the day. Now, the day opened on SPX and similarly on SPY and ES, which is what you're trading. You're trading ES. As always, you're trading ES and you're watching SPY, SPX, NQ, Qs, NDX, and both VIXs. That's VIX futures and VIX. And of course the composite. And if you haven't seen my video on the composite, check it out below. I'll list it below. Now on this particular day, SPX opened and drove down to this pivot line here and just beyond it to the previous day close, which was still a significant line. And it ran all the way up near the previous day high, but couldn't even get there before it turned around right around this mid pivot line right here. And then it came down and it blew through this mid pivot line, the previous day close, tried to mount a bounce on this yellow weekly pivot line, and it was a rather feeble bounce. I mean, it was 4 points, so that's $200. And that would have been the only bounce that I would have counted on for the day. But then as we go on, we see that SPX is breaking down into areas that were below the previous day's low. And it tries to bounce. And I've got this cyan vertical line here because this is a crucial point for you to start making decisions. Now, mounts a bounce here, nice bounce, comes down, and then blows straight through this with ferocious strength and comes right down to this next weekly pivot line. And of course, you can get a great bounce right there. But by this time, and let's take a look at the VIX chart, by this time, what's happening? So this is the previous day. This is the pre-market. And VIX opened here at the cyan blue line, came down and touched this pivot line and or the previous day's open for VIX futures and started to bounce. And it bounced with ferocious strength straight through the previous day high for VIX futures, a pivot line, the previous day VWAP close, and the main pivot line for VIX from yesterday. This is all being blown through by this candle right here, which is at 8:57, 27 minutes into the trading day. And then what happens on VIX? I'm going to remove this line so we can see a little better. VIX starts dancing around with these pivot lines. Comes up to a pivot line, down to this pivot line. Trying to break higher, not breaking higher, not breaking lower. Trying to break higher, comes down and literally puts in a ton of indecision candles right here, staying above this pivot line, and then it blasts off. So that's where you know things are going to start to get very volatile, and your regular charts will begin to stop following the rules. And what do I mean by that? What I mean by that is that if you've seen my video on my favorite candle setup, you'll know that we look for a very, very small candle prior to an explosive candle or an explosive couple of candles in the opposite direction. And that we will look for price to come back down to that area to refill long orders and to take a run up again. So we look for bounces on those special indecision candles. And when VIX becomes out of control like it became this day, you can't expect that any of those rules for the special candle are going to apply. So what happened here? SPX came down with a vengeance. And I'm going to zoom in on this. Came down with a vengeance, and you would expect that one of my special indecision candles would have been right there. You would expect that price would come back down to this area, the very small indecision candle before it exploded in the opposite direction. And for that matter, this is also typically a candle that you would look for a bounce. And when VIX is out of control, you can forget about trying to catch these. On any other day, when VIX is flat or going sideways, you would expect to catch a bounce right here, right there, for at least $100, easily. Likewise for this one. And why do I say this one, but also definitely this one? Because this one has not yet been tested. This was not tested by this. So this rolls over, doesn't think a thing about blowing through this because VIX is out of control by this point, and also really doesn't hesitate much before blowing down through this. And then, as a further slap in the face, SPX does finally bounce and comes up to this area where this weekly pivot line is, where this midline pivot is, and uses that as a place to roll over further. So, I think I've kept this to a relatively short video for today. That's really all that I have. I just wanted to point out to you the times when you should really step away from your charts, go to the beach, go for a walk, go do something other than trying to catch a bounce. Because on these days when VIX, and again, we're only looking at VIX futures here, but the same rule goes for VIX. The first point that you want to recognize is, has VIX, and when I say VIX, I mean both instruments, has VIX broken through yesterday's high? That's rule number one. Once it blows through yesterday's high, you know what? Just pack it in if you don't like shorting. But then when it starts breaking other things like this and this and this and this and this, and then bouncing on this, yeah, forget about it. So anyway, this is all I have for today. Thanks a lot for watching. Again, if you like the video, give me a like, please. Thank you. I appreciate it. I hope you have a great day. See you next time.